Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 10, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, I'll tell you this. You better get out a backup sticky notepad. We got a lot of stuff on the docket. We're going to talk through a lot of things. I'm going to show you what an absolute day trading bonanza looks like from the live room and inside the numbers today. These are the days that we wait for. They come up. You never know which ones they're going to be. And it just is an absolute forking bonanza. Volatility is a trader's best friend, but only the trader that understands how the market works and where the numbers are. Write that down, put it on a sticky note. If you don't have those two components and you're flying solo and you're going this alone, you better double check and ask yourself why you're not participating inside the numbers and or the live room. They're hanging around the trend line. Let's talk through the daily chart for a second. Remember, April is an on-time month for a turn, okay? That's on videotape. Let's get that back out in the open. Secondarily, we had the tinfoil hat event that I got made fun of about on Monday. Guess what? Here's Monday. Here we are today. They were putting in a bearish wedge pattern inside a breakdown candle. Check it out. We said if they get above the high of that breakdown candle, 523.87 right up here, that would promote new highs and a whole nother leg higher because the same energy would be released in the upward direction. The energy right now that is in the process of being released in the downward direction. What's stopping the tape from going any lower? Couple of things. The trend line. Write it down. Sticky note material. This low from the breakdown candle, 512.76. Why is that, by the way? Simply because that's where the market stopped on that big down day. Therefore, and by the way, it's right around the trend line. Funny how that works. And therefore, the market believes, doesn't matter what you believe, what Uncle Joe believes, what I believe. The market believes that that price, that general area is important, and they showed it to you again yesterday by coming up short of the trend line, and today by spiking through but closing pretty much right around the trend line. If you want to get granular from a 15-minute chart perspective intraday, you can see they closed slightly above the trend line. Last 15-minute candle before the last one of the day, second to last, came in to run a test of what? The trend line. We'll give that one a funny how that works. So therefore, below this low here, 512.76, what comes into play? Pretty much the 50-period moving average. There's a couple of intraday bounce type places before that. But from a daily chart perspective, that would become the next objective. Then what do you have? You begin to identify what's called market symmetry. What's market symmetry? Well, it's taught in the course, Lazy E-mini Trader, and basically market symmetry is A target, and B can be a reversal situation. Not every time, not all symmetry completions are made the same. They're not all created equal. What was the title of last night's video? Very simple. Mrs. Market is getting ready to move. What was the excuse today? The CPI data number at 8:30 a.m. Eastern Standard Time. What do we have tomorrow? The PPI data number. What are they going to do? Reverse the tape on the PPI data number? We've seen that before. Or do we get an acceleration in the downward direction? Now, if we finished on the lows today, I would suggest we would see a bounce back on the CPI data number. However, we didn't finish on the low. We finished on the trend line, and that leaves us guessing it's in the teetering neighborhood. They're teetering on the trend line. That's a technical term, sticky note material. By the way, in order for a trader in the live room or inside the numbers today not to make money, you would have had to have your computer stolen before the opening bell. Just saying. Just for informational purposes, for discussion purposes, Why does the market get hung up on the inflation data? Seems pretty easy at face value, but maybe some of you aren't aware what's really going on out there. It's from a psychological perspective. So the market really wants the Fed to cut interest rates. That will help the real estate market. It will relieve some pressure from the commercial real estate space with loans rolling over. If inflation is running hot, the Fed doesn't have good reason to lower rates, to ease off the pedal. Therefore, with lower rates comes easy money, comes inflated securities, comes inflated asset prices. It's all the same market. Easy money, assets go up. Tightening money, assets contract. People contract their spending. Higher interest rates, less money to spend, less easy money, less flows into the equity market. It is what it is. That's why the market's keenly focused on inflation data. If they're down in the morning, we're looking at the 50-period moving average. Intraday traders will have some numbers ahead of that and below that. If she's popping them tomorrow, they're going to go fill this gap left open from yesterday. And if they get above the gap, they're going to start working on the breakdown candle high area. Those are both sides in preparation for the PPI alphabet soup, or part 2 of alphabet soup this week. Let's switch gears over here and go to some of the trades that came up in real time in the live room. We had a laundry list. I'm going to go over a bucket full. Small bucket. 171.48 and 170.10 were two numbers today in Tesla. First one worked for a couple of dollar bounce. Second one worked for a couple of dollar bounce. Nice trades in Tesla. Participation in the morning trade in the live room. Not sure about the afternoon. By the way, speaking of live room, if you're a participant in the live room watching this video and you made money today, post something under the video. Let traders know what's working. Let traders know that this works. There's no substitute for social proof. I can talk till I'm blue in the face. They want to hear from people just like them. We traded Apple in the live room today. We had a zone 167.80 down about 60 cents to 167.19. They went to the lower number, bounced back in the other direction. Now here's the best part. Did you have a target? They'll ask. Absolutely. What was the target in Apple to exit the trade? About 168.65. That was in real time in the live room. We had plenty of traders in Apple today in the live room. Why is that? Not only because it was an available trade, but there's something different about Apple. It's got a different level of risk. It's got a different level, meaning in our favor as traders, eliminating some variable risk. When there's an opportunity in Apple, we're all over it. I want to talk a little bit about option trades and order entry. It's a sticky note lesson. Might want to tune in, meaning focus for a minute. Put your phone down. We had a trader in the live room that's also a participant in the Lazy Swing Trader Automagical Algo System. We're short Disney from higher prices. Disney's coming close to a first target. That trader was trading options, and he wanted to exit the trade this morning on the lower price, the gap opening or gap down opening in Disney. Hence, the trader put in, this is a member of the live trading room, put in a market order at Disney and got utterly screwed. And I want to explain why and how to avoid that. At the opening bell, he put in a market order. That gives carte blanche for the market maker to match an order that could be significantly lower than the then trading price, the then bid and ask. The stock can immediately take a dip, or just the option price can take a dip to match a matching price lower, which is what happened. He ended up selling the option at 27 or 29 cents, and 15 seconds later, it was trading at $3.50, which would be about a 35% profit from his entry on the original short trade from the Lazy Swing Trader algo system. So it was a mistake that don't put a market order in right at the opening bell. That's the lesson learned. In fact, there are many trading platforms out there that will prohibit you from putting a market order in the first 5 minutes of trading for that specific reason. They're protecting you, the customer. write this down, put it on a sticky note. Lesson learned for the member in the live trading room, lesson learned for everybody. He was kind enough to tell me what happened so that I can tell everybody so that we can avoid these things in the future. That's how the world goes around. We help each other. We're passing knowledge around. It's a pay it forward system. How about this one? Got asked in the live room in real time, what about VTV? Do you have a buy price for VTV? Came right back in a couple of minutes, maybe a few seconds, came 158.25. What happened? They came into 158.25, spiked it, ripped it back up in the other direction. For a day trade, not a bad quickie, if you will. This is how it rolls in the live room. AMD, 164.29. I explained to traders in the live room when we were asked about this one, it's a gap, but it's more than a gap. There was more there than just the gap, 164.29, and the bounce. Obviously, the numbers work. Now comes the commentary. Let's see what we've got and how the numbers shaped up today. Forget the early stuff because we had the CPI data release and none of this really mattered because they sold them off. So let's go to 8:32 and the data is out. Kill the tape was the decision. Great, creates opportunity. Back with updated stuff later. So what did I do? I went to work. What happens after I go to work? We come out with stuff, 8:55. Here we go. Here's the new thing with the new stuff. First, they were below the original bear pivot, ha. Next, we've got a spike in volatility, which is great for traders, but not all traders. You have to manage risk and understand that the moves this morning will be larger on a relative basis. That means you can make the same amount of money or more having a smaller position size. Reduce your risk. Now, remember the trend line. Today it comes in around 513.35, 40, give or take, in that area. Hard to pinpoint to the exact penny. We saw the trend line before, and you saw what happened. Look, even intraday, right of the vertical is today's activity. Here's a 5-minute chart. What did they do around the trend line? Back and forth, back and forth. Try to get rallies, a little bit of a squeeze operation, right back to the trend line. Same routine all day long. I got made fun of about that trend line from some traders here on YouTube a few weeks ago. How they doing? Sometimes when we do those drive-by comments, it's obvious that we don't know what we don't know. It's an awareness thing. So we have a bull case getting back above 513.71. The next target becomes 514.35. Write that one down, put it on a sticky note. You'll see later that that was a short opportunity, 514.35. Right there for a move right back to where? The trend line. But wait, there's more. If they stay below the trend line, we've got some numbers down here. We'll get to that later. Let's scroll up a little bit. I urge you to pause the video and read the notes in detail. In fact, guess what? If you're on my list, you're going to get an email later that links you to these notes. Read them in detail. And I've also posted on YouTube the entire live room session today. I want you to watch it. See what's going on in there. See what kind of education, what kind of learning's going on in there, what kind of trading's going on in there, what kind of money's being made in there. Morning session is 2 hours. The video is like an hour. I compress it down. I get rid of all the dead space. And you have the entire live room in just over an hour. It's worth your time. 9:34, give or take. It's all about the trend line at present. 9:48, 512.15 down to 511.35 is a support zone for a bounce back. Very simple. It's a one-liner. We're looking to buy that. How you doing? 512.15. The low of day was what? Exactly 512.09, and the rip it back up in the other direction. Pause the video. Read the notes, go back to the chart, and double-check the work. How about this one over at 10:10? If they run up to 515.50 to 516.50, a $1 spread, give or take, anytime soon, it's a short scalp with potential opportunity. Another one-liner, can't say it any clearer, 515.50. There it is, 515.50 up to 516.50. They came right to a place in the live room that we identified in the middle. They came to 516.14, I believe, is the high, or 16, and we had 516.15, give or take, as the next spot in the live room in real time. Either way, they collapsed right back down and came to where? The trend line. Did we have a short trade? Did we make boatloads of money in the live room? Absolutely. Don't even know what else to tell you. If you're not in the live room, you should be in the live room if you're active in the market during the trading day. Pause the video, read the notes, go back to the chart, or wait for the email tonight and read the notes and watch the video. Only had one stock on the move. Stuff was moving after the 8:30 a.m. data release. And by the time stuff started moving, I didn't have enough time to do the work before the opening bell. I had to do the work in the S&P and yada yada. What about W? Let's take a look at that one. $60.78. How you doing? Just incredible what these numbers can do. They don't all work 100% of the time, but we know the routine. Most of them work the large majority of the time. Now, technically, the low was $60.80 against 78, but I just wanted to point out, look what happened. Somebody knew about that number. Is her name Mrs. Market? And this, my friends, is what a bonanza looks like. What's going on over in Camp IWM? Gapped below the 50-period moving average and continued down. And you can see market symmetry right here. Big down candle, up move, bearish wedge pattern, and about an equidistant move lower. Target-ish. But wait, there's more. Look at the numbers we had in the IWM. We've had these numbers on the board. I've given them to you before. 202.15. They opened below it. What was the next number? 215. What'd they do? Spiked it, ripped it back up in the other direction to run a test of what? 202.15. Did we have traders in the live room that took that trade? You bet your bottom dollar we did. We have RTY traders, QQQ or NQ traders, ES, SPY traders, option traders, exchange traded product traders, all of the above. We've got something for everybody. Write this down. Next number in the IWM is 198, give or take. And then you have the 100 period moving average comes in right around 196.5, give or take. If they're running a rescue operation tomorrow, they're above the 50 period moving average, above 202.15. They'll start working on getting inside this low from here from last Friday, and then they would work on the gap. That's a tall order in one day. I'm not suggesting they can or will do that in one day, just giving you the progression of events as they may appear. What's going on with the folks down at the transportation department? Well, they got semi-mauled today, down 2.25%. And you see that bullish situation going on above all the moving averages. Obviously, that's no good. These lows right down here is your bogey. They give up those lows and the 200 period moving average. Look out below. If they hold the lows, then they're just going back and forth inside of the weekly bullish consolidation-ish, eating time off the clock-ish formation. It's a down day, down 2 days. Just putting it in perspective, you have to be the umpire calling balls and strikes, regardless of what chart you're looking at. Could be the same thing on different time frames. Say what it is. If it contradicts each other, then there's nothing to do. You have to wait for things to clear up. The daily chart matches the weekly chart and some intraday charts, then you're onto something. Daily chart Q, people. Teetering on the 50 period moving average. We have the same situation that we have in the spiders from last Thursday's candle. Get below, it opens the door all the way down to this gap at 4.25, give or take. If they hold this, then you revert to the weekly chart and say, what are they doing? They're just eating time off the clock, going sideways, letting the moving average, the 20 period moving average or home base, give it a chance to creep up to price. That's it. However, if the daily chart or if price is found at the daily chart gap down here at 4.25, then all of a sudden you're coming into home base. And now the question becomes, from a weekly chart perspective, do they hold home base? Each chart is independent of one another. And we use one to feed off the other. Things morph from smaller time frames to larger time frames. But the big picture is derived from the larger time frame. When you look at a weekly chart, you get to clear up the intraday and the daily chart noise. There's no noise up here, but when you look at the daily chart, this is a bunch of noise. It's tradable noise, it's just noise. XLF with a little bit of a drop today, down 1.5%, coming into the 50 period moving average. How quickly things can change. Now no longer above all the moving averages, so the trend isn't necessarily your best friend right now. Trend is up. However, they're coming down. 50-period moving average will be some daily chart support. What are they doing? Coming back to pay a visit, or at least come closer to, in the vicinity of, home base on the weekly chart. Markets never like to get too far from home base. Where have you heard that before? So isn't that what's actually happening at present? And yes, it is. We can all nod our heads together. We can do the heavy metal head bob. What about smash mouth, the semiconductor space? Right, you got market symmetry here. Symmetry brings you down to around 213.35 again. That was a trade once, first time, best time. We don't want sloppy seconds. But from a symmetrical standpoint, that still could become a target. Happens to coincide with the 50-day moving average. Obviously, this is a big area. Get below here and the floodgates can open up. Flip side is, big picture, this could be a bullish box, could be a bearish box. Move down, sideways, another move lower. How about a move up off the low? Sideways could move higher. However, you have a big reversal candle. Our bogey is Thursday's high. Thursday's high is 229.81. Call it 230 for argument's sake. You find this thing above 230, that's the bull case. Staying below 230 is the bear case. Smash mouth. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.